Deven, hi, morning. What's causing so much pain? Because everyone's been blaming China. China is on a trading off till 6th of Feb.
Good morning. Well, according to me, I think it's more than the China factor. I think it's basically I think weight reduction which is happening into the index stocks, and that's where I think you are seeing a larger fall. You have also started seeing a cracks in the IT stocks which are up till now holding strong. And that's where I think the market indices are coming down. Generally it is seen that I think when the index level comes down, probably I think most of the stocks also faces the unwinding pressure on its long position. So to a greater extent I think that is happening into the market. I don't see many of the fundamental factors going negative at this point of time. On the contrary, industrial production on one side is on higher side. At the same time, as we learn, we also likely to see, I think, a good amount of money coming into the government's kitty by way of auction of spectrum. At the same time, I think whatever the divestment stroke cross-selling program that they have carried out, they have basically got the kind of a money to breathe comfortably at the fiscal deficit situation. So to a greater extent at the macroeconomic front, the fundamentals are not worsening. I would say that I think the issues right now is more to do with I think the portfolio unloading which has started taking place from the FI side, which is causing this problem. Maybe sooner than later probably you will see some amount of stability returning back into the market, and you might see some kind of a bounce coming back into the market of about 150 odd points on Nifty. That's what my take is. So I'm not bearish, but at the same time I think there are enough amount of I think indications that this point of time in the market the participation is not coming up, and as a result of which I think the pains are seen much more than otherwise at this point of time. I do believe that I think the index should stabilize between.
You know, Deven, I love your glass half full approach. There is merit in what you're saying, that macros have improved, inflation eventually will come down, fruit and vegetable prices have taken a knock. But what really could pour cold water on your argument is liquidity. There is a proper liquidity scare in financial markets. We have not seen effects of tapering. 2 months of tapering, and look at the kind of flows and look at the kind of liquidity situation we are staring at.
Yeah, Nikunj, I think I too also I think have that at the back of my mind that I think there could be a pressure coming in because of the liquidity withdrawal. But what I have seen is that I think as compared to August 13, comparatively I think we are a little bit in a better situation both on the current account deficit side and at the same time also on the fiscal deficit side. Another important aspect is that RBI has ensured enough in the situation to keep the interest arbitrage situation on. As a result of which I think the FI funds I think are not going to withdraw money in hurry. We have seen I think the impact on the rupee. Rupee hasn't depreciated I think beyond certain levels of 1.5% to 2%. Vis-a-vis I think the depreciation in other currency of somewhere around 8 to 10% even in some of the cases. So from that perspective I have reasonably high confidence that the amount of liquidity related pressure I think may not be seen as much as we had seen in the month of August 13. And that's where I'm believing that I think somewhere you will find the support in the market and the kind of an upside of around 150 odd points in the Nifty, and thereafter it will chart out to create I think its own course I think for the further up move or not. But at this point of time I believe that market is oversold and it holds the merit to probably bounce back by about 150 odd points.
But Deven, do you think that bounce of 150 points as well would get sold into eventually?
Yes, I think that's the fear that you run, I think for sure. I'm not doubting that part of it, that yes, that bounce could possibly invite further amount of selling and people may want to stay on cash before election. Given the kind of I think politics which is being played out at this point of time, including Third Front and AAP and populist measures taken by the current UPA government, I think certainly people are not very comfortable, and that's where I think they may want to create the cash. So yes, I do buy that argument that at higher levels I think you may find some amount of selling once again coming back. So sustainability of that bounce I think is a question mark at this point of time, but certainly we'll take the course as we see this particular progress going forward.
Deven Chokesy, based on the latest JLR dispatch numbers which have come this morning, do you think Tata Motors will bounce back?
I think ideally it should, Nikunj, because I think if you look at even the month-over-month production of Tata Motors domestic portfolio, it is not bad in this particular month of January. At the same time, I think the JLR continues to contribute better in terms of the top line as well as in terms of bottom line for the consolidated Tata Motors. Going forward, I think 2014 is a year in which the JLR portfolio is going to launch new models, and that is going to at least stabilize and increase the sale for Tata Motors. And considering the fact that the America is improving on economic front, you are going to see better numbers coming up. So all put together, Tata Motors becomes a buy at lower levels. If slightest of improvement into the domestic market portfolio, probably I think would mean that the re-rating would start taking place in the stocks. To my mind, I think this fall is an opportunity. Buy gradually into this fall into Tata Motors.
Deven, do you think we are in for a result surprise from Tech Mahindra today, and post results Tech Mahindra could regain its lost ground?
Well, Nikunj, I think the telecom segment is expected to, I think, produce better performance in this particular quarter. And what you said is correct. I think in this quarter, I think you are going to see some amount of contraction in the margin, largely because of the holidays, and at the same time, I think you are also going to see some amount of margin fall because of the forex loss provision of about $25 million. So that would probably keep the bottom line under check as far as Tech Mahindra is concerned. Anything better on the forex loss provisioning, I think, could possibly surprise the market on the upside. At this point of time, I think we believe that I think somewhere around 665 crores kind of a net profit could be expected from the company in this particular quarter, which would be about 8% year-over-year growth and a sequentially degrowth of about 8%. But as I mentioned, I think it is largely because of the forex loss provisioning of $25 million. That may probably, I think, affect the bottom line performance. EBITDA performance, though, I think would remain on a smarter side, I think would be better in this quarter.
Deven, the only one space which held out yesterday, and that was pharma. Lupin got a good leg up in terms of its earnings, and the stock shot up a fair bit. What's the sense that you're getting? Is there still opportunity to buy into Lupin and make money there?
Well, they continue to perform better, I think, because of two reasons. One, of course, I think the depreciated currency is helping the company on a year-over-year basis, I think, showing better performance. Plus, in US territory, I think Lupin has shown, I think, even in the constant US dollar currency terms also, I think a 12% kind of a growth, which is very smart growth. At the same time, I think 5 ANDAs which they launched, I think, in US, I think that also helped the company. So overall, I think that performance has factored the kind of a growth which the company had to show in the last quarter. Whether I think the same kind of a performance could continue in the subsequent quarters, the answer may not be yes. I think at this point of time we believe that though there is nothing which is suggesting that the company may not perform well, but at the same time the similar kind of a stellar set of numbers I think may not be expected in subsequent quarters. So I would rather remain, I think, a little bit more careful in buying at high prices. At the same time, on the valuation front, I think the company is not inexpensive either. So to that extent, I think one would like to wait before buying into Lupin afresh.
Deven, in markets, nothing goes up in a straight line, but Sun Pharma actually has moved up in a straight line. It is up 64% in last 1 year. It is up by about 6-7% this year itself.
And I think one of the key strategy which the company has followed is, I think, generating cash for deploying into the inorganic growth and successfully turning around, I think, the acquired targets in a shorter period of time. It's something which I think the Sun Pharma has successfully demonstrated, and that's why market is giving Sun Pharma a higher premium comparatively in the pharma space. Yes, they do hold cash in the balance sheet even at this point of time. Yes, the possibility of, I think, they raising new money, I think, to acquire the companies, I think, or target companies, would once again, I think, give marketers kind of similar kind of a hope that probably, I think, they had demonstrated in the past. So there is nothing which is suggesting that the company's stock price probably may not command the premium. It will continue to probably command the premium, though some amount of moderation is not ruled out completely. As I would say, I think, yes, I think the buying opportunity would be there in the stock, provided you get some small correction in the counter. If you do get one, I think it would be an opportunity to add into the portfolio.
The other one to watch out for today is going to be Jubilant Foodworks, which is going to come out with its earnings. While the net sales are seen higher by about 28% and the PAT is going to appreciate by 11%, that's what the ET Now poll seems to be indicated. We are expecting another muted quarter because food inflation continues to remain sticky. Deven, what's your sense? And how soon could we see a recovery for Jubilant Foodworks and those heydays coming back?
Little difficult to answer that particular question immediately, I think, because as you rightly said that the margin pressure is being felt, I think, because of the food inflation, etc. I think for this company. And at the same time, I think you are seeing some amount of, I think, moderation in the demand at the same time. So I think to expect a sustainable kind of a growth, I think would be little difficult immediately. But yes, I think other franchises could probably start showing some better performance, and that's where my eye would be when management comes out with the commentary. So I would be rather remain watchful on this particular commentary more than the results in this particular quarter.
Deven, what's the sense that you're getting about the whole telecom space now, given that the auctions are on?
On one side, the government would be the beneficiary, given the kind of encouraging response that they have got in the first round of 2G auction itself, wherein they have been able to get everything 39,000 crores worth of bids already in place. On the other side, I feel that I think generally the capex kind of an environment is not good for the telcos in general, for basically I think show up the margin. So to a greater extent, I believe that I think most of the voice telephony companies I think would probably find little margin under pressure in coming quarters. So my strategy would be very clear, and I have been hitting on this particular strategy for some more time, for quite some time rather now, that I think would stay away from the voice telephony business. I think there are more amount of pains there still into this particular business. Though they may organically grow to a certain extent, but I think the pricing pressure would not allow them to show better bottom line performance. So stay away from the voice telephony, rather concentrate on the data telephony segment, where I think Reliance Jio kind of company could probably make the game changer plans, I think, when they launch the services.
Deven, good chatting with you. Really appreciate you taking the time out and sharing with us.